Welcome to part 2 of the lecture for chapter 20, and I'm going to pick up where we left off in part 1. So in part 1 we determined what the equivalent units were for materials and for conversion cost. That's a measure of what did we get done during the period. Now that I have that information, I can figure out what the cost per unit is. So in step 3, I'll take the direct material costs that I incurred for the period, how much direct material did I use, and I'll compare that to how many units I produced with respect to direct materials. So I'm comparing apples to apples here. I'll do the same thing with conversion cost. How much direct labor did I incur in my factory during the period or in this department during the period? And how much factory overhead was applied during the period? I can then take those costs and I can compare them to what I got done with respect to conversion costs. And remember, because materials might flow into the process at a different rate than the labor does, those can be different numbers. The equivalent units can be different figures. So in keeping with our example here, the next section, I have cost incurred during the month, okay, and I can get that from my general ledger. So I incurred, the first column is total, the second column of figures is materials, and the third column is conversion cost. So I incurred $2,900 worth of material cost, and for that much money, I produced the equivalent of 58 whole units. That works out to $50 per equivalent unit. For conversion cost, I incurred $2,700 and I had 60 equivalent units of production for $45 each. So that's step 3. Step 4, the final step, is where we're going to apply that information to what was transferred out and what we still have remaining on our workbenches in work in process. So the first thing I need to do in allocating the cost is I need to look at the total cost to be allocated. That's the cost that I inherited at the beginning of the month in my beginning work in process. So what costs were included or associated with all of the goods that were partially done at the beginning of the month, and then how much cost did I add to that? How much was incurred during the period? Okay. So under the FIFO assumption for how we're doing this, we're going to assume that the units in beginning work in process are going to be finished and transferred out first. So those will be the first units of what we transfer out, followed by units that we start and finish during the period. So units that are started and completed during the period are costed at full cost. The cost for the units that are started and completed is added to the cost of the beginning work in process for the total cost of goods transferred out. So I need to take a look at how much I had in cost for beginning work in process and then what it cost me to finish that. And I'll add that to the cost of the units I started and completed. I then need to calculate the cost of ending work in process. The sum of the cost of what I transferred out and the cost in ending work in process must equal the cost that I'm responsible for, my total cost. So here's an example here where I show the calculation for the equivalent units. That was step 3. And then for step 4, it starts with cost assigned to production. So I had $385 on my beginning work in process. And then I incurred $5,600 during the month. Notice that comes down from cost incurred during the month in step 3. So as the manager of this department, I'm responsible for $5,985, and I need to figure out now where that went. So down under cost allocation, the first thing I'm going to look at is the cost of finishing off the beginning work in process, because those were the first units that left. So I had $385 in initial cost, and then the cost to complete that, I'm going to multiply the equivalent units in beginning work in process for materials by $50, where there was 0 added. Okay, there were 0 equivalent units of production in materials for beginning work in process, so 0 times 50 is 0. For the equivalent units of production for conversion cost, I had, let me look back up here, sorry. I had a total of 4 equivalent units That was the amount of work it required me to finish off those. So I multiply that 4 from steps 1 and 2. I multiply that by $45 to get $180. So it cost $180 to finish off those beginning work in process units. So those units had a total cost of $565 associated with them. Now the units that we started and completed during the month, remember from steps 1 and 2, that was 50 units that we started and completed during the same month. I'm going to multiply that 50 units by $50 for materials. That's $2,500 worth of materials went into them. And I'll multiply that 50 units times $45 to get $2,250 for conversion cost. So the cost associated with what I started and completed during the month was $4,750. So I add that to the cost associated with beginning work in process, and I can definitively say that the cost of the goods that I transferred out of my department was $5,315. Now I'll take a look at the ending work in process. And again, I look back up to step 2 to see what were my equivalent units in ending work in process. Well, remember the materials go in at the beginning of the process, so the ending work in process had 8 equivalent units in for direct materials. So I take 8 times 50, I get $400. The conversion cost, so the amount of work I had into the ending work in process, was 6 units, so 6 times 45 is $270. So I add that together, my ending work in process has a value of $670. So now I add that to the total cost of what was transferred out, and I can see that I've got $5,985 that has been allocated between those two groups of goods, what was transferred out and what is still sitting there. I can double check to see that $5,985 is equal to the costs that I have to account for. If those two numbers are equal, I probably haven't made any mistakes. It's kind of like a double check system. So I will, before I move on to the next subject, I want to make a comment. I'll post a separate video where I walk through an example of the entire process. So I'd recommend you take a look at that video as well. Okay, now to talk about journal entries. So we needed to do this cost of production report in order to be able to do the journal entry that says how much was transferred from Department A to Department B, as an example. Okay, I need to do this in order to come up with that entry. So first, when I purchase materials, that's pretty straightforward. I debit materials, I credit accounts payable. We've done that lots of times in Accounting 201 and 202. When materials are requisitioned, and again that word requisition means when the production manager in the factory gives a formal order to the material warehouse saying, I've got some work to do and I need some materials brought over to me. So in that case, there's two different departments, mixing and packaging. So both departments had direct materials go into their work in process. So we debit work in process for each of those departments. Remember, each department has its own work in process account. And then I also got some indirect materials. So whatever that might be, some small things that can't be traced to the end product. So I have a factory overhead account, one of those holding accounts for each department. So I debit factory overhead mixing for the indirect materials for that department and factory overhead packaging for the indirect materials that came out of the material warehouse for that department. And I credit the materials account to reduce what was in that building. Next, I incur labor. So I process payroll, and based on time cards, I know what departments to charge for the labor. So direct labor goes into work in process mixing, direct labor goes into work in process packaging, and I credit wages payable. I record depreciation. So when I instead of recognizing depreciation expense, it's a product cost, so it's going to attach itself to the product, okay? So I'm going to debit the factory overhead accounts. Remember, I debit those factory overhead holding accounts for actual cost incurred, and I credit that account to apply it to work in process. So I debit the two factory overhead accounts, I credit accumulated depreciation for just the depreciation on the factory equipment, okay? I might have depreciation expense for the president's car or the office building, that's separate. Next, I apply the overhead, and I do that based on the predetermined overhead rate for each department and the activity, whether it's direct labor hours or machine hours or whatever method we chose to use. I do that department by department. I debit work in process and I credit the factory overhead account. So now I've got the three types of costs that have gone into each of my departments: direct material, direct labor, and factory overhead. Now I'll do those cost of production reports, and that will tell me how much cost is going to be transferred, in this case, out of the mixing department. That must be the first department because I'm crediting that. I'm reducing that department's work in process inventory. And I'm going to debit the next department, in this case, packaging. So I'm transferring the cost from one department, from department 1 to department 2. Now, in this case, there's only two departments in this company, so when it leaves department 2, packaging, it's going to go into my finished goods inventory. In this case, it was an ice cream company, so it goes into finished goods for ice cream. Okay, that means it's on the shelf ready to go to a customer. When it goes to a customer, I debit cost of goods sold and I credit finished goods. So this gives you a kind of a clear picture of how the costs flow through from the material building into our factory, from each department in the factory to another, and then finally to the finished goods warehouse, and then into the back of a customer's truck. There's some additional benefits we get from doing this cost of production report that can help us with decision making. One example is I can pull total information for costs here, and I can compare that from one month to another to see, is our costs going up or are they going down. I could divide that by units completed and come up with a cost per unit and see if I have a trend that might cause a problem. If I see that I have a trend that is possibly problematic, I can look at that per unit and I can see exactly where I have a particular problem. In this case, I've got a big jump in energy cost and a big jump in tank cleaning costs. So I might want to ask the production manager for that department, what happened in that regard? And is it something we need to be worried about in the future, or was it a one-time thing? The last thing I want to mention is yield, and this can be important for factories like sawmills and in anything fabric like clothing companies where there could be waste, okay, where I could start with a given quantity of material, and by making decisions about where I make cuts or what I use and don't use, I could end up having some material that isn't used that's thrown away. So that's called yield. So I want to look at what my quantity of output was versus my quantity of input. And that's a really important thing. I used to work at a company that had a sawmill, and we would measure yield for every different kind of material that we used. So we would see right away if there was a problem with quality that we needed to jump on, because this yield number would always be in a certain range, and then it would go way down if we had maybe a bunch of wood that had cracks in it or something like that. So that can be an important thing to track as well. So that's the end of the lecture for chapter 20. So remember, I'll post a video of walking through one of the cost of production reports again. I think you'll find that helpful. Thank you very much. And please, as always, don't hesitate to shoot me an email if you have any questions. Bye-bye.